Okay. Hello and welcome everyone to the Alternative Investment Strategies for Family Offices panel talk as part of the Asian Disruptive Investment Summit 2023, hosted by GDA. My name is Nathan Korus. I'll be the host and moderator for the discussion today. First off, big thank you to GDA for hosting this event and inviting myself, as well as all of our other esteemed panel guests to join. We're delighted to be here. Thank you for everybody tuning in around the globe live right now and to who will watch this in the future with the replays. Happy to have you guys here. And thank you mostly to our panelists for joining today from around the globe. Gents, welcome. How is everyone today?
Great, mate.
Yeah, good.
Thank you so much. Good. Me too.
Good. I see we got people from quite a few different countries, so thanks for coordinating schedules to be here. Our topic for today is alternative investments. There's a wide range of categories of different alternative investments.
Sorry, I just moved into my room.
Oh, no worries. And there's no category of alternative investments hotter right now than Web3, aka cryptocurrencies, or as my mother refers to the entire industry, Bitcoin. And it's the most talked about sector for a number of very good reasons right now. In just the last few weeks, we've seen XRP win a landmark case against the SEC, setting a massive precedent for the legality of crypto tokens as non-securities. The world's largest asset manager, BlackRock, came full circle to join a rapidly growing list of Bitcoin ETF filings, with their CEO, Larry Fink, going as far as to say crypto is going to transcend any one currency. And the payment solutions giant PayPal has launched their USD stablecoin. With so many traditional financial juggernauts moving into the Web3 space, it's naturally caught the eye of many family offices as a new potential area to explore investment opportunities. So along with Web3 and a number of other alternative investment opportunities today, we're going to take a look at some of those new strategies, as well as talk about if they're a good idea, why or why not, along with how to identify opportunities in the space, what due diligence obstacles things like Web3 investments pose, and how to manage risk and measure performance with new highly volatile asset classes. So with that, let's hop into some introductions here. Michael, do you mind kicking us off? Give us a brief introduction to yourself.
Thank you. Thank you for having me. I'm the Michael Hwang, the founder of chairman of BigBang, which is a 10-year-old history early stage investor in Korea, as well as Singapore a little bit. Honestly speaking, I'm not the expertise in terms of Web3 blockchain space, but I have a few experience investing in two. Recently, we are more focusing on the deep tech space. Thank you.
Stellar. Thanks, Michael. Jason, how about you?
So I'm kind of on the other end. So I'm a crypto investor and a founder in the Web3 space. So we've just launched our platform called Clio, which is it's a for-good platform that leverages blockchain to tangibly bring about positive change. So the idea is that our first clients are people like Google. So we're reducing their cost per lead while doing some good to offset the bad that the digital marketing is doing, right? So hopefully I can provide a slightly different perspective. I think we're talking to a lot of family offices. We're just going through a raise at the moment. So I kind of, I'm in the space, but I'm talking to people that are looking or, are entering the space too. So thanks for inviting us along today.
Excellent. Thank you, Jason. Salman, good to see you again, my friend. Tell us a little bit about yourself.
Thank you for the introduction, Nathan. My name is Salman. I'm the CEO of Australian Gulf Capital. We are a private equity VC and corporate advisory firm with offices in Australia and UAE. We kind of align regional interests between UAE and the Australian Asian Pacific region, provide access to our investor base across the risk return spectrum. So opportunities, high risk, high return opportunities in Web3, all the way down to less risky, less return opportunities in real estate.
Excellent. Thank you, Salman. Hugh, welcome.
Thank you. So I work for a family office in Hong Kong, Uma Venture, centered around early stage investment for my parts. My experience is in management consulting. I've headed the incubation hub of a blockchain startups. We launched a few tokens back in 2021 when it was quite hot. Fortunately, not at the moment, but I'm happy to be there and discuss with you guys.
Fantastic. Thanks, Hugh. Awesome. Well, let's hop right into some of the main points we're going to discuss today. As we mentioned before, talking about diversification through alternative assets. What are some of those different types of assets? How to identify what might be right for your family office. Talk a little bit about the due diligence and risk management needed for these different types of alternative investments, and then how to measure performance when looking at new types of asset classes. As mentioned before, Web3 and cryptocurrencies, I think a lot of people here have some experience investing in. It's a very hot topic right now, especially for early stage investment in Web3 startups, but there's a variety of different options available, from CeFi to DeFi options. Who'd like to kick us off and give your opinion on some of these different opportunities in the Web3 space? Are they worthwhile for family offices? If so, why? And if not, why not?
I mean, Nathan, if I can start from the space point of view, if that's okay. So from an investor, and then I'd actually love to hear what the rest of the guys say in response to what I've said, is like whether that sounds sensible or not. Because I think you kicked off really well talking about, Bitcoin is not really, I don't believe, is seen very much now as a risk. And in fact, with the offices that we're talking to, it's crypto is starting to seem a bit more like risk mitigation rather than actually the risk. It's like, well, actually, if we don't have exposure, what kind of happens in the rest of the space? And I think there's a tremendous amount of interest around not Bitcoin, I can say it in that way. So Bitcoin is obviously, or I can say obviously, Bitcoin is really, it's a store of value. So as an investment opportunity, it's a place to park some money. But is it going to make tremendous returns? Well, maybe if you're in derivatives, which of course we've just had this amazing news that Coinbase is going to offer derivatives of Bitcoin, right? So, but from an investment point of view, we position ourselves what I think is in the biggest opportunity, which is early stage startups in the Web3 space. So, I built my previous business in the Web2 space, had 25 amazing years talking about what the internet, 25 years ago, what the internet would do for people. And I think we're now at that point now where we're realistically seeing what Web3 will be able to transform businesses in the next kind of, next 20 years. So even though it's still in its infancy, I think there's a huge amount of potential for, high rewards from essentially backing startups that are Web3s. And I do think that they align with family offices philosophy, which is, if it's a market you understand, it's a market you want to be in, and most importantly, you've got a bit of patience. I think these, early stage startups are a great one. But we're also investing in obviously infrastructure, so layer 1, layer 2. DeFi is a great opportunity too, particularly with yield farming. So being part of the ecosystem and putting money to work, that quite excites me. So being able to provide assets into the space for people to get a word, I think is really great. And there's obviously other things. In the last session, somebody talked really great about tokenizing real assets, for example. So one of your speakers was talking about tokenizing investments in property. So you don't have to own a whole piece. You can maximize your exposure against assets. So I think there's a lot of opportunities. I think Bitcoin doesn't necessarily present the investment opportunity. It presents a hedge. But I think there are some really exciting business startups in the space. I'd love to hear what the other guys think about that. They might have a different view.
Yeah, quick follow-up on that, Jason. You mentioned Bitcoin. You mentioned yield farming. You mentioned early stage startup and Web3 investments. Where, I guess, would you rank those? Traditionally Web3 is seen as on the extremely risky side, high risk side of the spectrum. You kind of talked about a variety of different Web3 investments. Where would you kind of rank those internally?
I mean, the hardest thing is, from a store of value, that's your lowest risk, right? So Bitcoin is a very low risk. It really is. It's a slow return over the next, 20 years. So I'd say really there is risk in DeFi because we've seen in the last peak, we've seen protocols be hacked and we've seen issues. So giving somebody else your money, it does present, I think, actually the largest risk, although you might think it doesn't. I think when I started about the early stage startups, I think that presents both the lowest and the highest risk because it's not really one category, right? So, the advice that we're giving people, and I guess a turkey doesn't vote for Christmas, right? So take our projects, that's where I'm talking from. We're live with a product with customers, right? So our customers initially are Google, Lenovo, HP, people like that. And we're going to market with a raise opportunity with a live product, with live customers, with a real team. Now, there's a lot of early stage startups that are still selling an idea, if that makes sense. You give us your money and we might go and execute on this idea. So I think the least risk actually is in the early stage startups. If you believe in the market, you believe in the team, you can assess the product, and therefore it's a relatively low risk with a high potential gain. But I do think in that space, as it starts to heat up, maybe next year, there'll be lots of people selling magic beans, and that is then the riskiest opportunity. So I think it's, if where we've been investing, just my personal journey is in early stage startups at ICO over the last 3 phases to make a gain, and then parking that into more store of value type assets and protocols. And in the DeFi space, the opportunity now, take Ethereum, for example, to be able to run a node directly and take part is a lot less risky than some Web3 startup saying, well, we do it all for you, give us your keys, right? So I think there is risk in the space. I think there's a lot less today than there was in the previous cycle, and I think there was a lot less than there was before. And I think I'm one of the ones that believe regulation is good, particularly around things like stable coins and things like that, because I think it brings some confidence into the market. But there's always this thing of the earlier you enter, the greater the reward, right? And that's back to what Salman said. It's about your personal risk reward attitude across the kind of balanced portfolio.
Fantastic. Thank you, Jason. Salman, Hugh, you both have experience in the Web3 space. What are your thoughts on that?
Yeah, man, I just wanted to add to Jason's comments. I think the market is definitely maturing from what it was in the previous cycle, and it has opened up a whole new universe. And the same criteria and principles that we apply to traditional investments when we're assessing them, we can apply to Web3. So it's becoming an asset class which is becoming more and more difficult for family offices to kind of completely ignore. I mean, different family offices from different regions have got different sort of adaptability to Web3. You see Middle Eastern family offices, they're slightly more risk averse, so they're taking their time to adapt and make those investments as compared to Asian family offices, for example. All right, so I think we apply the same criteria that we apply to traditional investments. I mean, there's a number of opportunities. You've got DeFi. We are big on real world asset tokenization. We really love those ideas. We've been investing in real estate related to tokenization, there are companies that are tokenizing farms in Africa. So a lot of impact investments and so on. So number of opportunities. There's DeFi. So what you had in Web 2, you've got similar type of opportunities now in Web 3. So it opens up a complete new universe for family offices to look into. So it helps them diversify their portfolio a little bit and gives them that potential to make extra returns. Of course, there are risks, and family offices need to keep that in mind, and that's why they get on. They pay for experienced investment managers to kind of reduce or mitigate that risk when it comes to assessing and managing their kind of investments.
Yeah, more of the same. I mean, you see pretty much everything in the Web3, in family office, people buying Bored Ape, Yacht Club NFT, or people holding blockchain. I really differentiate the crypto, which is your store of value or day trading, and the early stage investment that you see in usually in equity, sometimes equity plus token. I see less pure token nowadays. Was quite a lot in 21. But in terms of criteria, again, convergence, same criteria for early stage investment if it's in Web3 or if it's in Web2 or whichever field. With a strong preference, at least on what I can see, in infrastructure projects, in solid project, logistic, for instance, where blockchain have a lot of potential, is one of the serious and hard things, I would say. All of the DeFi project that we could have seen earlier on. They find it very hard to get funded. I haven't heard of a lot of DeFi project or hot potato project getting funded since a year or so.
Yeah, you bring up a really good point there. I think that's one of the things I find fascinating and most compelling about Web3 is that it covers so much. It covers everything in the traditional financial markets. It covers everything in tech and a number of other industries. I think right now when most people think about Web3, they think, Bitcoin, I think early stage investment for the most part, NFTs for a few people. But there's really so much more. There's for every different type of risk appetites to, whether you want to invest in early stage startups, run nodes, as Jason mentioned before, DeFi plays, centralized exchange plays, there's futures, derivatives, et cetera. It really spans a broad area as well as a number of sectors that you can invest in. Michael, you've got experience outside of the Web3 space. Tell us a little bit about some of the alternative investments in the Korean area right now.
Okay, let me add some sort of new emerging trend in terms of Web3 in Korea. I think I've seen several startups. They don't call themselves as a Web3 or blockchain startups because it's not the good mood in Korean market, right? But basically they are using the blockchain technology itself. Particularly, their technology is for the art, the pictures, photo art, right? Recently, there are several emerging new startup is focusing on this kind of art trading platform. But essentially, they are based on the blockchain technology. But they don't want to be looks like kind of a Web3 platform companies because as a general investors, we don't want to invest into the blockchain companies, but we want to invest into the new something, right? Absolutely, always. That's the one kind of a new trend because even this government in Korea is supporting for some STO mechanism. All of you are STO mechanism, right? STO, which means this new the themed startups wanted to be another form of STO technology based the platform company focusing on this kind of new assets. That's my idea I wanted to share in Korea.
Yeah, fantastic. I think what a lot of people call the Web 2.5 trend is becoming more and more popular. We have a lot of great infrastructure in Web 3, but one of the biggest, I guess, detriments or one of the biggest criticisms of the industry is the interfaces are extremely clunky, to say the least. So a lot of projects are doing, as you mentioned, Michael, bringing Web 2 interfaces, overlaying on top of Web 3 technology, where it's a familiar interface that people can come and use. Feels like a Web 2 experience, but they're benefiting from the power of the Web 3 technology. I think we're seeing that across a number of different industries. We've mentioned a few here already, art, real estate, tokenization of real world assets. I know this is big in the gaming industry and metaverse, trading platforms, etc. So yeah, it's an exciting new trend to follow there.
So let me just one example. Yeah,
go ahead.
You can search the name Musical. Musical is a music IP trading platform company in Korea. They are invested more than about 20 million, something like that, which means this is kind of another good example focusing on this kind of IP trading platform based on blockchain technology.
Yeah, absolutely. The entertainment industry is one that's seen a lot of innovation in this space as well, from music, sports, even movies and TV shows as well. Fantastic. Thank you. Salman, you mentioned a bit earlier about mitigating some of the risk by bringing in experts in the space. Do you think it is something that they should be hiring outside experts to bring on the team, or is it something that they can train an existing manager or analyst to come in and I guess what's kind of the onboarding scale look like? Is it better to try and train someone internally or bring someone in from the outside?
Yeah, well, that's a very good question. I mean, it just not applies to Web3. It applies to family offices managing their investments in other asset classes as well, right? So it depends on how big your investment office is. If you're investing 10 to $100 million, it doesn't make sense recruiting an analyst to kind of address different asset classes, because not one person is not going to be experienced in different asset classes, right? You need an investment manager that can oversee the operations, that can add value to the startup or whatever business that you've kind of invested in, right? Right. So depends on the size as well, and we're seeing that a lot of these family offices are realizing that managing their investment becomes more of a cost burden. Giving access to your network, or helping them through your contacts as a family office, to an investment or to a startup that you've made an investment in, kind of makes sense. But if you're talking about actively managing, and anyone that's managed an investment in a startup, they realize that it is active management. It is really difficult work, making sure that your startup is following those milestones that you set up for them, tracking the performance against those KPIs, and reporting those milestones back to the investor is a job in itself. So depends on the size of the investment and the family office. If you're willing to take that overhead, I mean, it does make sense to recruit somebody. But more often than not, most of these family offices are realizing that it is cheaper, more cost effective, to get an investment manager that has a whole team who are experienced in various asset classes that they can dedicate to their investment.
How active should these family offices be in these early stage investment startups? Should they take a hands-on role actively in the management and shaping of the company, or just simply more along the lines of you were talking earlier, making sure that the initial roadmap is being followed?
Yeah, it depends on your allocation. Most of the family offices, they have a really small allocation to venture cap, and then out of that venture cap allocation, you've got a smaller portion for Web3 investments, right? So it doesn't really make up, or at least what we're seeing in the market at the moment, it doesn't really make up a big portion of your portfolio. So getting an investment, or recruiting somebody to manage those investment, kind of comes down to the size of your investment, and what portion of your portfolio it makes up, right? So I mean, if you're getting an investment manager, obviously they'll be actively managing your portfolio. But if you're supporting your your startup that you've invested in, or the investing company, through opening up your network, or making phone calls for them, then you don't really need somebody to manage it, right? But it does add value, getting an investment manager that can actively ensure that because a lot of these startups, especially Web3 ones, you see a teenager getting up and starting a Web3 business, right? They have a smart idea, they've got a brilliant idea, but they've got zero commercial sense. They don't know how to get regulatory approvals. They don't know how to set up a business. You need somebody to guide them through that aspect, while they can focus on bringing this new technology or this great idea, focus on the operation side of things, and you can look after the other aspect of the business.
Yeah, absolutely, absolutely. How about in terms of identifying opportunities in the space? We talked about a variety of different ways to get into Web3. Via centralized exchanges can be more similar to traditional trading of stocks. There's a myriad of DeFi strategies spanning from things like yield farming to liquid staking derivatives. There's node operators invested in early stage startups. So how would you guys recommend for family offices to go about identifying what type of investments are suitable for them?
Look, I mean, I'll give others a chance to speak as well, but we kind of apply, the same kind of criteria that we apply to traditional VC investments, right? It has to be a solid team, has to be a disruptive idea, and the team has to be focused as well. One of the things that we've kind of come to realize is that you see a founder working on a startup and you invest in them, and then you realize they've got 3-4 side projects happening, right? So they lose focus, and then it's for us, we're seeing this as a risk, right? So number of things, has to be a solid team with good traction. It does help if a prominent VC or a prominent investor has made investment, because then you feel a little bit more comfortable. Somebody with deep pockets has invested in the startup. You know, they're not going to let it go down easily, right? They've got a whole network. So the same kind of criteria that you apply to traditional VC is what we apply, but it comes down to also your deal sourcing capabilities, right? So if you've got a global network, you get more quality deals. Web3 businesses are popping up left, right, and center. You know, we get like dozens of pitch decks on a daily basis, and going through those pitch decks is basically it's a difficult job. You know, it's a full-time job, picking good startups out of those. So it comes down to your deal sourcing capabilities, but you could apply the same criteria that you're applying to traditional VC investments. Finding when it comes to DeFi, finding basically good fund managers that have a good track record with high Sharpe ratio, low drawdowns. So I mean, I wouldn't say that you really have to, as a family office, look into something new in terms of assessing. You could apply the same kind of principles that you do when assessing investments in other asset classes.
Fantastic. Anyone else want to add to that? There's Jason, you talked about a couple very alternative solutions, like participating in running nodes. There's things like liquid staking derivatives and yield farming. Do you think any of those kind of things are appropriate for family offices?
I think so, because I think it's about, I think one's about capital growth and one's about deployment of capital, right? So I think you've got, projects like early stage investments like Salman was just talking about, and how you identify those in the due diligence, which I think is incredibly important. And then I think there's how you put those things to work, right? So, and with all of this, it's about risk and reward. And I do want to circle back to something that Salman just said, actually, but let me talk about DeFi first, which is, you've kind of got this, I think people that have been in the space, investing in the space in a while, understand that everybody promotes DeFi and staking based on their APR, right? Or APY, as it's referred to in the space, which is usually a daily based reward. A lot of it just applies some common sense, right? So if we're looking at, okay, we want to get into staking on Ethereum as a good example, right? So we can do something with Lido, which is probably going to get us a 3.6% APY, okay? And that's not me, this is not investing advice, I'm not saying go stake on Lido, but you can do your due diligence, and they're running official nodes and a partner, 3.6%, okay? Now I can jump onto Twitter, and somebody's got some magic way of doing DeFi and offering me 89% APY, right? So a lot of this is actually understanding that if something looks too good to be true, it probably is. And if somebody's bringing money and using those rewards to distribute to other people, then we can call it what it is, right? And we've seen plenty of those, not just guilty in the Web3, we've seen plenty of those in the TradFi space.
Jason, you'll be surprised, mate, how many people are going to fall for it. You see 90%.
Well, hey, I got an algorithmic stable coin paying out 20% APR if anybody's interested.
Yeah, I'm like, we know, and something looks too good to be true. And that's where I think having somebody that can peel that back. I think the other gotcha, I think, for me, in terms of looking at these projects is, I always said in the space is, does it need the blockchain, and does it need a token, and what happens to that token, right? So, our point of view is we actually built the proposition. We built our platform over 2 years. When we started, we didn't even know if it needed blockchain, because it's about impact investing and execution of a good. Actually, the blockchain, because it's an open source, open ledger, it's the perfect way to provide on-chain proof of an execution of a good, if that makes sense. So blockchain's perfect use for it. The next question then is actually, does it need a token, and what's the token do? Because for me, this is one of the single biggest gotchas for family offices investing in this space is, do I want equity? Do I want the token? And it's a very complicated question, because there's not one answer. And depending on the role of the token just could be draining liquidity and profits from the equity holders, right? Or the token could be adding value to the profit of the business. It's a very complicated space. And I think Nathan, you summed it up perfectly, which is, it's like the start of Web 2 again. It's like saying, oh, I'm investing in the internet. Well, what is that, right? I'm investing in the internet. Like, I'm going to go buy me some internet, right? Well, you know, this is the next wave, and we're adding, Web3 is adding money, and we can talk about AI too, right? Because AI needs a common currency for it to move to its next phase, which is the transactional phase. AI can't be dealing with fiat conversions, right? So crypto is the layer that's going to, you know, push AI into real everyday impactful use. But we need to make sure that we've got a level understanding that there's going to be thousands of businesses that are, or, you know, I remember a few of us are probably old enough to remember when the internet came out and all sorts of people were putting stuff on the internet, okay? And people invested in it with that dot-com boom, not necessarily because they understood the idea of the market, because it was an internet investment. And we're at that same point now, which is look at the business model, look at the opportunity. I love the word that Salman said, where he said we look for people that are doing something disruptive, right? Is this doing something different? And is it enabling us to accelerate the space? So I think when you're looking for projects, for me, I'd just say avoid high APY on staking. But, you know, in terms of investing in companies, really look at what the token model is. Do they need the blockchain? Do they need the token? Does the token drain profits? In which case, then, do I need to have exposure to the token and equity as a family office? Because, you know, tokens give me liquidity, they give me quicker rewards, you know, equities are longer term value. If you're only playing in one, make sure that the other's not a drag on it and it's actually supporting it. So it does, I think, need quite a lot more due diligence, because you've got this, you know, but I think the opportunities are kind of outweighing the, you know, the time it takes to do that kind of due diligence, if that makes sense.
Yeah, the token dilemma is a very interesting one. There are many benefits that a token can bring in, but I think we've seen after the last few years and in the bull run previously is that token has become a very easy way to raise money. And so projects that don't necessarily need a token, they may have a good business model, multiple revenue streams, et cetera, are forcing a token into their business as a means of raising funds quickly and easily. Hugh, do you want to talk to us a little bit more about some of the other unique due diligence aspects that come into play when you're looking at Web3 versus the traditional investment markets?
Well, it's all depend on the size of the investment, right? You're not going to do a full background check of every single member if you're investing small tickets, you know, 50K, 100K, it happen, right? So the first elements have to be consistent. Now, how are you investing? Are you investing in equity in a stable regulation environment where you have legal option, or are you sending USDT to get some token somewhere you're not really sure where it is? That's actually where family office can have an edge, especially if they're still very close to their main business. Because if you have people on the ground that you can draw upon, even if they're not, you know, family officers' main business, but they can check, does someone know that person, what's their history, while limiting the cost. You don't have to pay 20K to ask a lawyer to do full due diligence, right? Beyond that, what is the business, as Jason say, what's the business? Try to look beyond its Web3. You can apply it to AI. Beyond its AI, you know, what is the business? How does it make money? Does it make sense? Does the person have business sense, technical sense? Does it work? Do you understand it? If it's not, if it's 89% APY on Ethereum, the chance of it being a scam, as mentioned, is slightly a scam, right? We don't do much higher investments, so the due diligence process would be completely different for 1, 2, 3 million investments. So I cannot speak on that part.
Gotcha. Thank you, Hugh. Michael, how about yourself? You primarily invest outside of Web3. What are some alternative investments outside of Web3 you guys are looking at right now? And what are some of the due diligence risks that they pose compared with a more traditional investment option?
I just want to add another idea in terms of measuring the startup performance, particularly the growth stage. You may know that there are several credit card solution company for the startups in several countries, right? In Korea, there is company named GoWeed. GoWeed is GoWeed startups mean, right? Anyway, this company is credit card company for the startups. They already have 1,000 startups client, which means about 3 years later, they realized that they could analyze of startups every transactions, money transactions, which means revenue, card transactions, spending, something like that. They are approaching us too as investors, and how could we leverage this kind of data to analyze the prediction of future revenue of these startups, which means we are talking about the venture debt based on these analytics. I think it could be another way to investment into the growth stage startups based on some metrics. That's the new idea from my side.
Yeah, that's a very good point. You know, a lot of these technologies, Web3 or otherwise, are so new. We don't really have, you know, kind of
numbers.
Yeah, we don't have an idea of what the potential is for these different opportunities. Anybody open to anybody here? What would you say in terms of measuring the performance of these alternative assets, especially things like Web3 opportunities where the volatility is quite extreme compared to a lot of the more traditional market opportunities?
Well, the
Yeah, but I mean,
volatility
depends
only.
on what opportunities we're talking about. If we're talking about a DeFi strategy that is making a return, you could benchmark it against Bitcoin, for example. Like I said earlier, you could look at their Sharpe ratio, which is basically the risk-adjusted return. You know, if it's a high Sharpe ratio, it's probably a better strategy compared to the other one. And if we're looking at startup investment, then you're looking at milestones. You know, are they hitting their KPIs? They're hitting their milestones. You know, the project is growing. How is their media traction? In Web3 space, we know that media traction is very, very important. You know, so is the number of following increasing? You know, is the business doing what it planned to do initially? Are they? And it comes the most important thing, which a lot of these businesses neglect, is the business model. You know, at the end of the day, the business is only going to be successful. It's going to make money. You know, so if a business is really, really high break-even point, and it's going to take you billions and billions of dollars of revenue generation before you can even hit break-even, then it's probably a high-risk business, right? If the business model from day one is profitable and cash flow positive, that in itself is a huge achievement. So, you know, business model needs to make sense. And are they hitting those revenue numbers and EBITDA numbers, the bottom line numbers or not? You know, it all comes down to that. Otherwise, it's a pyramid scheme anyways, right? So if it's not making money, unless you're providing a service for society, or if it's an impact investment, okay, you could afford. You know, I heard recently today or yesterday that OpenAI is kind of losing $700,000 or $1 million a day. You know, for me, even if it's not making profit, I want OpenAI to still keep on going because I use it on a daily basis, right? But as an investor, if I'm investing in this, I want returns, and the only way I can get returns out of this is if my business ends up making money. If it's not making money, I'll just wasted. I've thrown away my money. It's a pyramid scheme. Sorry.
I was gonna say, it sounds like you're talking a bit mainly from the equity perspective. What are your thoughts then on the token side of things? Should family offices be getting involved in token races, or is that something they should avoid altogether?
Yeah, look, Jason made a very, very good point, and that's something that we look into when we're doing our due diligence. You know, a lot of these, because at the moment there's not a lot of regulation, so it's wild out there, right? People are coming with funky tokenomic ideas where, you know, we've seen a lot of startups where they're going to raise capital first using tokens, then after they've raised capital, they've done a listing, they go and then they start equity, right? And they go sell equity exactly on the same basis that they're selling tokens. And then we're like, okay, where does the value lie in? You've already sold the tokens and you raise capital, and the token holders are probably getting profit sharing. On what basis are you selling? We've actually come across some startups where they've done this. They've created a token, then they raise capital on a token, then they've sold equity, then they do a new token based on some new idea. So it is when you're looking at tokenomics, it is very, very important, again, to ensure to understand where the value is coming from, and what do tokens represent? Do they represent utility? Do they represent equity in the business? Are they giving you any profit sharing based on tokens? So it all comes down to that. But again, the underlying business model on which the token is built needs to make sense, because if that underlying business model is not profit generating, then your tokens are just created out of thin air, and eventually it turned out to be a pyramid scheme. So
I mean,
Jason,
can I just jump in? I was saying that. I was just going to say,
go ahead.
I just want to say a tremendous thank you to Salman, right? Which is just saying something that's common sense. Now, so we're talking to, so a good example, we're talking to a number of quite large exchanges at the moment, which is an interesting journey in the Web3 space. And the metrics they're interested in are ludicrous in a sense of one of the biggest things they talk about, back exactly to Salman's point, is how big is your community, right? So we've got 55,000 people in our Telegram, we've got 94,000 people on our Twitter, we've got 16,000 people in our Discord, all live numbers. Doesn't mean anything. Doesn't mean anything, right? What they're essentially asking is, have you got enough people you can shill your token to, which is a short-term thing. That's all they care about, right? Is if you've got a good idea, have you got a big name? So we're like, oh yeah, we work with Google, IBM, we're just on a big proposal for global MasterCard, and we've got loads of social. Brilliant. We can pump your token, right? That's a ludicrous way to look at Web3 investments, right? Because ultimately, that token has got to be supported by the business model. So there should be no different metrics. It should be, is the business revenue generating? Is it built? Does it have customers? Is it in a market that we understand there's an opportunity? And is the business delivering against financial metrics? If you measure a business success based on its token price, it's a very, very short-term view, and you're going to be on an emotional roller coaster of the team must be amazing because the token price is up 30x. Oh, the team must be terrible because it's now down. I know loads of amazing projects that are down 90+% since the last peak, and it's the businesses are great. The business is still making profit. The businesses are still turning people over. Token prices on the floor. So I think you can't extricate the two. If you're a family office looking to invest, it's got to be on basic business fundamentals. Don't get suckered into, how big's their community and how many social mentions do they get? Because those are all very short-term things that might help a token price pump. But if you're taking a longer-term view, you shouldn't be worried. Now, of course, if you're a crypto investor and you want 100x in the next 2 months and you want to stick some money in an ICO, then those things might be important because you're looking for an early entry, an early exit when everybody else is joining. So they're not terrible measures, but I think for sensible long-term investments, there's nothing different in the Web3 space, apart from what we just said, which is the token a drain on the profits? Or does the token contribute to the business? And what do you need exposure to? I think that's kind of the complicated piece. But I just wanted to say thank you for common sense.
Yeah, absolutely. I think that's something that is one of the very first things anybody getting into this space, especially, family office getting into this space, need to understand is about the highly cyclical nature of Web3 currently. Now, that's going to continue to diminish as the overall market cap of the space grows. But I mean, myself included, when I first got into crypto at the end of 2018 or 2017, I didn't understand what a 4-year cycle was. I saw the market crash and I thought, it was a fad, it's all over. And then ignored the entire sector for almost 3 years and missed out on, untold numbers of opportunity because of that. So, if you're looking to get in and make a quick buck, if you are an experienced crypto investor and trader, sure, there's opportunities to be made in the short term as we come back into a bull market. But for family offices looking at long-term strategies, you guys are 100% right. It's definitely not the right strategy to take. We should be looking more at businesses that have real value and long-term roadmaps in the space there. So opportunities on both sides, but I think when we're talking about the real high risk stuff, that's as you mentioned, Jason, jumping into an ICO for a quick pump and dump kind of scheme there. Any other thoughts on with these alternative investments, any sort of benchmarks or metrics you guys are going to be using that are different maybe than the traditional markets when identifying key opportunities here in the space?
Well, I mean, one thing I can mention is that we are more careful about when we're investing in Web3 as opposed to traditional VC or other investments is the regulatory side of things, and this cybersecurity side of things. So regulatory could destroy the project completely. Like it has a huge impact. I mean, you invest in a Web3 startup in US, and next thing US comes in and says no Bitcoin, no crypto allowed, no Web3 allowed. All of a sudden, you've lost your money. So I think he's made a good point. It is very important to ensure that you're investing in a jurisdiction that is crypto friendly or Web3 friendly. I mean, Dubai is a great place at the moment. UAE, there's a lot of investment going into UAE because of the support from the government. Switzerland is another one which is great when it comes to Web3, especially tokenization of real world assets. And cybersecurity is important in projects that are related to, for example, decentralized exchanges or even centralized exchanges. We invested in a decentralized exchange recently, and their wallet was drained by a hacker who's sitting in a Whoop area, and they've taken all the liquidity away from the project. So, it is very important that if you're investing in a Web3 project, you ensure that they've got high tech security around their wallets and the processes and everything. So these are the two key areas that we focus more on when we're kind of looking into an investment, or actually pay more attention as opposed to when we're investing in non-Web3 related projects.
Yeah, around the security concerns, what are some advice for family offices that are doing their due diligence around security aspects in terms of audits? What are some things that they can do? A lot of these people are maybe non-technical, or if they are technical, Web3 it's a completely different kettle of fish. What advice or what methodologies can they use when researching a project from a security perspective around their blockchain?
So look, audit is a good one, which you mentioned. Getting a tech audit, getting audit around their processes is an important one. Around the security is an important one. And what is also important is that a lot of these projects, Web3 projects, if they're coming and they're not disclosing their identity, anyone that's invested in an NFT space would know that a lot of these NFT projects do not really disclose their identity. For us, it's a red flag, right? So if you're not disclosing, I mean, if you're a DJ, you probably understand that we're coming from a traditional investment space, and then you're investing in a project where you've got no idea who's behind the project. Next thing you know, there are rug pulls. It has happened a number of times where people have invested in a lot of projects and their money is just wiped out because somebody scammed them, right? So it is very, very important you know who you're kind of investing in. We founded an investment called Droid Capital on Solana network. It was one of the first NFT-backed VC project, and from get-go, we made sure that we disclose our identity. We put our LinkedIn pages over there, and everyone was kind of surprised that these guys are. We know who they are, and it was something new in that space. But because we actually like investing in projects that we know who we're investing in, we kind of took that approach that, hey, we want to do the same thing. So it is important that you know who you're investing in, you get proper audits done around the systems and the processes and around the people that you're kind of investing in.
Stellar. Jason, Hugh, Michael, anything to add to that from a security perspective?
I mean, I think it's down to it's complicated because it's how you're entering the market, right? So if you're if you're investing in store of value assets, then it's all about your security, right? It's now your due diligence as to where you do that, right? And there's a very popular saying in the space, which is not your keys, not your tokens, right? So, looking at cold storage solutions and how you do it, then I think that's incredibly important for your doing your own storage. And actually, I think that's one of the things that will change the most in the space over the next 3 years will be third-party custody solutions. So, I fully expect mainstream banks, it looks like they're starting to get into it now, to actually offer custodial solutions that are insured to people. So I think that will give, because I think that does stop people a lot, is well, where do I store it? Am I responsible for it? It kind of feels like you're stuffing $100 bills into your mattress when you're storing all of your stuff on a so I think that's the thing. But back to what Salman said, I think if you're investing in a project, it's about due diligence for their stuff, right? So is their treasury multi-sig, for example? Where do they store their assets? What's the very basics like smart contract audits, right? So we've seen some horrors of people backdooring smart contracts where they could go in and drain liquidity without people knowing. So I think your security point of view is going to be based on the attitude as to where you're investing. Is it somebody else's security or is it your own security? And it's a big part of, I think, this holistic picture of where do we want to invest in the Web3 space across all of those opportunities, really, from startup investments to DeFi, all the way across to kind of store of value.
Yeah, that's a great point. I hadn't even really considered. Rather than just the due diligence of the security of the project itself, it's they may be fully secure. If they're giving you tokens and you don't know how to manage those tokens, which, let's face it, that with the Web3 space, you're dealing with multiple networks, different wrap tokens. I introduced a friend recently just trying to get Bitcoin, and just trying to explain the difference of which Bitcoin to click on within the wallet. Is confusing enough for most people, right? So yeah, that brings up a whole new area around security of just keeping your own tokens safe once you have those. So yeah, very good points there. We're kind of coming up on time here. Some great points, covered a broad range of topics within alternative investments here. Let's just go around the circle quick. If anybody has any final statements they want to add, or any last points they want to make, Hugh, let's start with you.
I wanted to add another idea. If I could have another discussion session with you, I think it could be a good opportunity for the global family offices in terms of investment into the pre-IPO stage companies in Korea. You may know that Korea is another top 10 stock exchange nations, which means if we could have some way to invest into this opportunity by using the STO or some kind of secretized blockchain technology, it could be a good way to make a profit, not just for the family offices, as well as some startups too. That's my agenda we want to talk about later.
So you said, what was that again? You said PIP?
Pre-IPO. I mean,
pre-IPO projects. Yeah. Okay. Gotcha. That's a large emerging market in the Korean sector right now.
Yeah, because the Korean Stock Exchange is number 10 exchange market in the world. Every year, at least 6 up to 100 startup is listing in Kosdaq and Kospi. Which means if we could liquidize this kind of opportunity by using the STO global market as sort of a global market, everyone from you can join this kind of investment opportunity by put a little money into the STO, right?
Yeah, that's
looking at this kind of a way.
That's a fantastic point about blockchain, Web3, and tokenization in general. Is it does open up into a worldwide market rather than just a regional market. So thank you for that, Michael. Hugh, Jason, Salman, we'll just go around here real quick. If you guys want to give your final statements, thoughts, anything along those lines, we'll wrap up the call here.
Yeah. I think one of the important points to look at, where's the project? As Salman mentioned, Middle East country are great for Web3. Singapore, Hong Kong I see a very, very strong push from the government directly. I talked to several government officials. They're really motivated to push it. So I would look for one of those three places, and in Asia, Singapore or Hong Kong. Well, I'm Hong Kong side right now. I live there, but it's, opposed to the US, where we see the balance moving quite a lot. And there's great project, great startup, great environment there.
Yeah, I think the U.S. market's pretty hands-off right now in the Web3 space. It's just too much of a risk with all the regulatory uncertainty at this time, which is unfortunate because, there's, like, as you mentioned, there's a lot of talent, a lot of money in that space. But the powers that be haven't figured out what they want to do just yet. How they
I'm sure. I think it'll. Well, but maybe the other way of thinking about that is it's a lot amount of money due to come in, and when they sort out their regulatory compliance, it will come in. So if I was, I'd rather be in the room before they enter than follow them in, right? I think just that, and I'll let I've loved hearing what Salman's been saying, so I'll let him kind of finish on the summary. So just from my point of view, obviously, thanks for inviting us along. I think we're in the impact investing space. With Web3, we've been speaking to a lot of family offices, and I think it's clear their objective. It's not just about getting gain; it's also about doing some good. And I think there are startups in this space that do present an opportunity to get exposure to crypto, to be able to do some good and not sacrifice your financial returns because of the innovation in the space. I think, not changing tack slightly, but I think humanity faces a number of challenges. And I think in this space, we can innovate our way out of those rather than wait to be taxed out of those. And I wouldn't want to be in any other space right now. And what I don't want is anything that we've said here about regulatory compliance or Ponzi's or stuff like that to actually put anybody off coming into the space. I wouldn't want to be anywhere else in the world right now than Web3, because this is the part that's going to help solve our problems. And of course, in doing that, there is a huge potential for gain. So I think just my advice would be just don't let anything we've said put you off, and just think about the birth of the internet, those initial companies saying, well, this is what the internet's going to do for people. We're sat today live streaming from all of us are in different countries around the world, and the audience is in even more countries, right? Well, I couldn't have imagined 25 years ago that this is how business would be conducted. I was used to rocking up to a trade show, right? Or go to an event. So we don't know where the space is going to take us, but it's going to be the most explosive growth, and it's going to be the most fun. So don't let anything we've said kind of put you off, I guess. That was my kind of, closing summary.
Couldn't agree more, Jason. And I think you made an excellent point there. And we really look at the nomenclature of what we've been talking about. Web3, what does that mean? This is, we talk about a lot of, new terminology, blockchain and crypto and, node operators and things like that. At the end of the day, this is just the third evolution of something we already have that we're all very familiar with, the internet. And we all know how that has changed the world for the better. And at the end of the day, that's what Web3 really is. It's just the next evolution of that technology. So yeah, great points there. Couldn't agree more. Salman.
Yeah, no, look, Jason has summed it up beautifully. There's not much that I can add to that. It is an exciting space. We're excited to be part of it, and we're seeing more and more family offices, not just family offices. You're seeing, institutional investors, sovereign wealth funds, wanting to invest in this space. So definitely, it's a space that you don't want to miss. And from a regulatory perspective, it is a wild west still now. Which kind of is an attraction itself. You want to do a project, it's easier to do a project than you would do any other project in the traditional finance space. That is heavily regulated. So why not start here? So look, great initiative by GDA Capital. Thank you for having me here. Thank you, Nathan, for hosting, and lovely to meet you, gents. Jason, Michael, and Hugh. Thank you very much, guys.
Thank you, guys.
Thank you very much.
Thank you. Thank
Michael,
you so much.
Jason, Salman, Hugh, it's been great catching up. Curtis, I think we'll turn things back over to you.
Take care. Bye-bye.